Good evening. Good evening, all. This is Dr. Amrita Tiwari. I'm the assistant professor of the uh, SIRT, Sage Group of Institutions, Bhopal. And today I want to share some notes about the bank reconciliation for the BBA first year students. Firstly, we discussed about for the what is the BRS and need for BRS and format of BRS and reason of and difference. Interpretation of BRS without adjustment, cash book and balance book with the examples. Firstly, we discussed the cash book. What is the cash book? And business prepare the cash book. It record both cash and bank transactions. Deposit and withdrawal, we can see here in the format. And the passbook, bank prepared passbook is recorded bank transactions. And the passbook is the format of the passbook is you see in the format of the passbook, and both the columns is the debit is withdrawals and deposit, and the credit deposit is. And this is the formats, the different formats of the cash book and passbook. Problem faced by the business. What is the basically problem of the reconciliations of the bank books and passbook in the business? His bank balance is 35 and the bank is shown is the 25 only. Problem faced by the business. If the balance shows by the bank column of the cash book is different from the balance shows by the bank passbook, and the business firms will identify the cause of such difference. Bank reconciliation statement is a statement prepared to reconcile the difference in between the balances as per the bank passbook or cash book or as per the passbook. Reasons of different timings or differences. Check issues by the bank but not yet present for the payment. When the check is issued by the bank and suppliers to credit on the firms, these are immediately entered on the credit side and the cash book, and however the receiving party may not be present the check to the bank for the payment immediately. The bank will be debit the firm's accounts only when these checks are actually paid by the bank, and hence there is a time lag between the issues of check and presentations to the bank and different between the two balances. Check paid into the bank but not yet collected. When the firm received a check from the customers, they are immediately recorded in the debit side in the cash book, and this increase the bank balance as per the cash book. However, the bank credit the customer's account only when the amount of the checks are actually realized. The clearing of the checks generally takes few days, especially in the cash is outstanding, and checks or whenever the checks are paid at the bank branch and other than the one at which the account of the firm is maintained. This leads to cause of difference between the bank balance and the cash balance. Direct debit made by the bank in behalf of the customer. Sometimes the bank doubts the amounts of various services from the account without the firm's knowledge. The firms comes to the know about only when the bank statement rise. Example for such deduction include check collection charges, incidence charges, interest on the overhead, unpaid checks, deduction by the bank, stopped mounts as a result, and the bank balance is the passbook as lease as than the balance as per the cash book. Amount directly deposited in the bank account. This is the instance when debtors directly deposit money into firm's bank account, but the firms does not receive the information from any source until they receives the bank statement. In case the bank records receipt in the firm's account at a bank, but same is not recorded in the firm's cash book. As a result, the balance shows in the bank passbook will be more than balance shows in the firm's of cash book. Interest or dividend collected by the bank. When the bank collected interest and dividend on the behalf of customers, then these immediately credited in the customer's account, where firms will know about these transactions recorded the same in the cash book only when it received in the bank reconciliation statement. Until then the balance as per the cash book as per the passbook will differ. Direct payment made by the bank on behalf of the customer. Sometimes the customer gives standing instructions to the bank to make some payment regularly on the state and days to the third parties. For the example, telephone bills, insurance premium, rent, tax, etc. Directly paid to the bank on the behalf of customer, debited to the accounts as per the account, as per the bank passbook would be less. One shows the cash book. Check deposit, bills discount dishonored. If the check deposited by the firms is the dishonored or bill or exchange drawn by the business firm is discounted with the bank is dishonored on the date of maturity, the same is debited to the customer account by the bank, and as per the information is not available of the firms immediately, there will be no entry shown in the firm's cash book. And regarding the above items, this will be known to firms when they receive the statement from the bank as per the result, and the balance as per the passbook would be less than the cash book account. Error committed in the recording transactions by the firms, omissions of wrong recording in the transaction related to the checks issues, and issues deposit and wrong totaling, etc., and committed by the firms while the recording entires in the cash book and cost different between the cash book and passbook balance. Error committed and the recording transactions by the bank, omissions is wrong recording in the transactions related to the checks, deposit the wrong totaling, etc., committed by the bank, while posting entries and passbook also cause the difference between the passbook and the cash book. Thank you for the listening, and I think this PPTs helps the explain about the bank reconciliations. Thank you so much.